Howdy, Jacob here. Today we're going to do a more in-depth analysis on the company Baidu. When we initially did our valuations and the current price, we are just 5% off. So I want to remind everybody about the financials, and then go over some of the notes that I took on reading the company's quarterly reports and their most recent 20F. So they are in the interactive media and services industry, 31 billion market cap. The enterprise value is not what it says right there. We do have 27 billion cash-like products, but you have to subtract off capital leases, long-term debt, short-term debt, which is about 9, 10, 12. So you're looking at about 9, 14. It still is an enterprise value of minus 31, minus 14. I mean, you're looking at $17 billion enterprise value. So very, very reasonable there. That's a extremely positive thing where they have way more cash-like products on hand than debt. A lot of those cash-like products are short-term investments though, so they are liquid, but they're not entirely liquid. Like they're still investments into companies where it's not difficult to remove a couple million or possibly, I guess, billion from an investment, but that's likely there to stay, which is fine. But the growth of the company has been very impressive, over doubling over the last 10 years. And gross margin is down, operating margin down. Those are not as positive. But if you do look at the last 5, 6 years, we are seeing a jump up. So gross margin is expanding, operating margin is going back up. With return on invested capital recently, pretty poor, not even double digit. So that's kind of a bummer. But previously, we were seeing well above that in the 10 to 15% range historically. Let's just look at some of the notes that I have for the business so I don't waste too much time here. So, since February of 2021, discussing their fourth quarter results of 2020, Baidu started their quarterly reports with Baidu, a leading AI company with strong internet foundations, dot, dot, dot. A year prior, discussing their fourth quarter of 2019 results, they stated their reports with Baidu, a leading search engine, knowledge and information centered internet platform, and AI company. Baidu was pushing AI well before it became super popular here. Um, and although we don't necessarily see it hit the bottom or top line yet, they don't necessarily have those lines out on their income statements or free cash flow statements. They have been investing in AI since 2010. And so they do have a very solid base and a lot of background to where I think it's going to really help them, uh, slingshot them to positivity. They are focusing on the long term by investing in AI to create opportunities in AI cloud, autonomous driving, smart devices, and more. That said, they are focusing on cost optimization and business efficiencies in the short term. So right now, they're really focusing on spending a little bit of money on these things that could possibly create long-term success and long-term growth down the road. But as of now, anything that they do have, they're really trying to be efficient with it. And I actually saw that with a decline in employees from 2021 to 2023. It wasn't a big decline, but I did notice a couple thousand employees were removed in those 2 years. So they were focusing on, cost cutting and driving up margins. And so their share repurchase program for up to $5 billion in shares, they made that in February 2023. Since then, they've bought about $700 million worth of shares. If they do use that entire $5 billion on the current $31 billion market cap, you're representing about 15% of shares. So they could buy back 15% of shares at possibly cheap prices, which would be a fantastic investment for them. Current CEO is Robin Li. He's a co-founder of Baidu, just 55 years old. CEO since 2004, 59.3% voting power. So again, everything I say in these notes is just kind of the things that I look at for a business, not necessarily what you need to focus on solely. It's all to create a story and to create a background for you to come up with your own assumptions. Like Google and Meta or Facebook, majority of their revenue comes from online marketing for businesses. So when times are tough, like we saw from COVID, Google or I don't remember Google did, but Facebook I think actually did have a revenue decline, and or maybe it was 1%. Either way, when times get tough, their people, their companies are not going to necessarily go towards advertisements that aren't guaranteeing profit. They're going to really be efficient, just like Baidu's doing right now, but they're really going to focus on the things that are guaranteeing them money and hitting that bottom line, which advertisements are good in some ways. They're good for growth, and sometimes some other things. But when it's not guaranteed and when times are tough, you got to cost cut somewhere, and that's usually a good place to cut it. So when times are bad, Baidu might have some tough revenues, but again, it's a very short-term issue. Same with Meta and Google. When it happens, like, it's just not a big deal, and it's actually a great opportunity if the stock falls a bunch. No expectation to pay a dividend anytime in the foreseeable future. I like that. First recipient of driverless license in China and USA, and have been offering driverless rides in places of China since 2022. So they have millions of rides now. I think it's like 5 million rides since 2022, and that's pretty positive for them. They're one of 4 of the big autonomous driving vehicles companies out there. So they started as a search engine like Google. And I think there is a data advantage compared to some other AI companies. So AI, one of the biggest things that's most popular or that provides possible revenue down the line is data. And Google has data because they've been the leading search engine in America since I think 2000, and Baidu's really no different. Really, since the mid 2000s in China, they've been the leading search engine. So much so that they actually have the percents are all different that I'm seeing, but they have at least 50% market share in China. And so I think with that data that they have available through all the search engine, I think that's going to create and people going to them for searching. Machine learning and AI is one of those things where the more you use it, the better it actually gets. And so I think they do have an advantage there. The Baidu app is the #1 search plus feed app in China with monthly average users of just over 500 million. And then, like I've already compared them a couple times, I want to say, based on knowing Mohnish Pabrai and him being a shameless cloner, I think that Baidu is a shameless cloner as a business, which is fantastic. That's similar to Microsoft, and I think they're great at it. So search engines came out well in 1990. I think was the first search engine. When Google became super big, Yahoo became super big. Baidu was founded after that in 2000, and so their that was their first big business was cloning. Waymo started autonomous driving, then Apollo Go started. ChatGPT became huge, and then Ernie was created, their form of ChatGPT, and then YouTube and other short videos, short Instagrams, whatever became popular, and then they created their own as well. So I think they're good at cloning, and I think that's fantastic for a business because you don't have to be an innovator to make a whole lot of money and to make your shareholders a whole lot of money. So R&D made up 18% of revenue in 2023, so that's huge. They're reinvesting so much into their future to have possible growth down the line, and with the cash they have on hand, I mean, it's just very positive. They own over 20,000 patents in China, and then about 40,000 employees at the end of 2023. 22,000 is in research and development, 9,000 sales and marketing, 6K operation and services, 3K in management and admin. And then to the right, I have their share repurchases. So these are in thousands. So they actually don't repurchase that much in shares a year. Their largest in the last couple of years has been about 1.7% share purchases net of their stock-based compensation in a year. And I mean, they do repurchase at okay prices. I mean, this 7 million shares at 164, probably not the best idea, but honestly, 125 is very likely not a terrible price to be buying back your shares at. And so I'm gonna update my old analysis. There's 3 things that I changed. So I do think revenue 7% with all the businesses they're in is very reasonable. I think that the margins I did were fine. Share change, I lowered it to 0.5% because they are buying back shares now, but I don't think it's going to fully offset stock-based compensation. I think they reinvest so much to get or they're going to reinvest and acquire businesses so much to get these types of returns and margins. 17 PE based on their growth. I think at the end of 7 years, it'll still be fantastic. And then because they're based in China, I want a 20% return. And so if we just do a 10% return, we see that the 125 that they were buying back shares is not bad. But for me, I think these assumptions are reasonable based on the analysis that I did. And so we'll be waiting a little bit more. So hope you enjoy the video and have a great rest of your day. Thank you.